China has increased its tariffs on US imports to 125%, raising the stakes yet again in a worsening trade war between the world's two largest economies. Volatility on global markets continued today, even as China's Commerce Ministry suggested it would ignore any further retaliatory tariff hikes from the US.
The tit-for-tat battle continues. China has raised tariffs on American goods to 125%. In Beijing, President Xi Jinping told his Spanish counterpart that China and the EU must join forces to oppose unilateral bullying, a thinly veiled reference to President Donald Trump's aggressive trade tactics. But China hinted that it had no intention of increasing tariffs any further, even if Washington continues its escalations. American tariffs on China now stand at a whopping 145%, and the standoff has alarmed global trade officials.
The escalating trade tensions between the United States and China pose a significant risk of a sharp contraction in their bilateral trade. Our preliminary projections suggest that merchandise trade between these two economies could decrease by as much as 80%.
But as tensions flare with China, Brussels has shifted into full negotiation mode. The EU's Trade Commissioner will hold meetings in Washington on Monday.
The European Union is willing to find win-win outcomes, mutually beneficial deals with our American counterparts to avoid tariffs and to avoid any harmful escalation that would be damaging on both sides of the Atlantic and indeed to the global economy. Commissioner Šefčovič travels to Washington DC in good faith to try and find solutions that can benefit us all.
Finance Minister Paschal Donohoe, in his capacity as president of the Eurogroup, struck a similar tone in Warsaw.
We would rather be in a situation where we were not facing such a trade challenge and difficulty, that instead negotiation would work, that we could engage with the US in a cooperative way and avoid the need for further measures in the future.
While the EU prepares for dialogue, Donald Trump is reportedly seeking the same with China. But so far, Beijing has rebuffed his overtures. With the dollar hitting a three-year low today and markets still on edge, the US president is left waiting for Mr. Xi to pick up the phone. Edmund Heafy, RTE News.
Well, let's get more from our Europe editor, Tony Connolly. And Tony, what impact is this tariff crisis now having on the European economy?
Well, Vivian, obviously there was big relief that Donald Trump paused the swathe of tariffs for 90 days, but the volatility is affecting the European economy. European stocks have been down. The decline there is 1.8%. That's the weekly average, but that's 3 weeks in a row in the red. Now, the European Central Bank is going to issue what the market believes will be a 25 basis points rate cut on Thursday of next week. So that would bring the ECB interest rate down to 2.25%. Now, the European Commission has done some mapping on what this crisis is going to mean for the Eurozone economy. In a benign scenario where there's no retaliation and things kind of stay as they are, it would be a 0.2% decline in GDP at Eurozone level by 2027. If there is a retaliation, it would be 0.5% decline in GDP. So, you know, these are significant but not huge, because the estimate for the US economy in a non-benign or a retaliatory situation, the estimate there is a decline of 3.3% in US GDP. A lot of observers and traders are looking now to Germany. It has relaxed its debt brake, so Germany could be spending in the region of 500 billion euro for both defence spending and infrastructure spending. So that could be I suppose, a central boost to the European economy.
Tony, thank you.